Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions Market Insider TV. Our opening commentary Monday morning, October the 14th. Thanks for joining us as we take a look at our trading day ahead. Looks to be a good one so far anyway, with decent movement in the grain markets overnight. We had the supply and demand report on Friday. Hope you found some information on that useful, valuable. We'll talk a little bit about that here this morning. It's covered in our weekly and daily newsletters, and we had some audio comments right after the report came out on Friday as well. Dollar is firmer here again this morning. This is a problem. It is a problem, going to continue to be a problem, as I believe the dollar is on a march to 104 area. So we're knocking on the door of 103, but I think there's very likelihood we're headed to 104 in that dollar, and that's going to continue to put pressure against commodities. Gold and silver down a little bit off of this dollar news, and grains also being affected. Crude oil down almost 2% here this morning, $1.50 losses in that crude, as you should be looking at the December contract now. There's only about 7 or 8 days left in the November contract, and the stock market's a little firmer. So we see corn down 3.5, beans off 6 overnight. These both gapped lower Sunday night and then tried to come back and fill that gap. The meal down about $1.50, oats down 5 3/4, and then you have the wheat down 3 to almost 5 cents. 4-cent losses in New Crop, Kansas City. There's better chances for rain in the plains areas. If you look at our newsletter, we have a 7-day forecast. There's decent chances of rain in some of the dry areas of the hard red wheat belt, and that's putting pressure against the new crop wheat. If that rain materializes. It's not a real widespread general rain, but it is kind of confined to parts of Kansas and parts of Nebraska, Oklahoma. So let's talk about markets here and what we see overnight and what we can expect in our day today. So this week, I'll be doing RFD TV this morning, and then Wednesday, Thursday, Friday as well. So pretty normal week of TV activity. Make sure you follow us on Twitter at Midwest Markets, Brian Hoops, for latest market information. Today is Columbus Day. Markets are really unaffected by it, but there is no bank holidays today. Government offices are closed, no mail service, I believe. And that means no reports. So we won't have crop progress or export inspections today. They are kicked back till tomorrow. And we also have NOPA crush report out tomorrow in addition. All right, so let's talk about some of market activities. So over the weekend, we saw rains fall in Brazil, more rains in the forecast for this week. And this is kind of the start of the regular monsoonal type rains that are expected to hit Brazil. So we're looking for weakness to be prevalent across corn and soybeans. Now, if we see small rallies, they should be sold, hedged if you haven't already, as this is a beneficial rain forecast, and then opens up the downside, not so much because of Friday's report, but because of the potential for South America. U.S. weather looks warm and dry over the next 10 days. That should allow an active harvest pace to continue. I did a trip to Minneapolis this weekend and back to Springfield, and it is not a lot of soybeans out there, but boy, is there a lot of corn left to be harvested. Lots and lots and lots of corn need to be harvested yet. So the bean crop looks largely put away. Still some beans in Missouri and southern Iowa, but looks like the beans, north of that, all gone. A lot of corn left to go. So WASDE report came out Friday. It was mildly bearish to corn and soybeans. Not bullish, not super bearish, but mildly bearish. Corn yields came in a little bit larger than expected, 183.8, new record. That's up from last month. Corn production at 15.2 billion bushels versus estimates of 15.17, and it's larger than last month's 15.186. So corn yields increased a little bit, new records here. We have stocks about 100 million bushels larger than a year ago, and that's going to be something that trade has to work through. We've got to have a lot of exports to overcome that supply situation. Soybean production at 53.1 bushels per acre. That's actually down from last month. Not a surprise, really, and down from last month and last estimates. That's our screen's wrong there. I should say estimates instead of last month. Production forecast of 4.582 billion bushels, almost exactly as estimated. It down just very slightly from a month ago. We still have supplies 480 million bushels larger than a year ago. That's going to be an issue, trying to work through that when we have big South American crop coming on as well. So we were anticipating a little bit larger corn, a little bit smaller soybeans. I'm surprised the USA didn't go larger than they did in the corn yields. and maybe even a little bit smaller than what they did in the soybeans. They're very conservative this month. Ending stocks for corn, 1.999 billion bushels, just call it 2 billion. Slightly above estimates, down a little bit from last month. A lot of that was already factored in with the small grains and quarterly stocks report. Meanwhile, soybean stocks, 550 million bushels, unchanged from last month, and the 546 that was estimated. Wheat stocks slightly below estimates, slightly below month ago levels. Pretty much a neutral report for the wheat, and wheat's falling on the weather forecast. Cash cattle trade called steady to slightly higher this week. Cash cattle trade was stronger, 296 dressed last week, 187 live. We're looking to build on that until proven otherwise. I think packers may want to start expanding kills a little bit this week after a small kill week last week. So we're probably going to push back up into that 600,000 range for the kills. And last week's slaughter was only 580,000. That helped to support the box beef. Friday, the 18th, we have cattle on feed report. Our estimates are in the newsletter. We're looking for near just slightly below on feed numbers of 99.9%, placements at 94.6%, markings at 98.1%. We'll have those tomorrow for you in the presentation here. All right, we're going to sign off. I'll be getting ready for RFD TV. Hope you have a great day. Good luck and good trading, everyone. This has been Brian Hoops from Midwest Markets. Talk to you soon.